In this episode, I'm going to talk about student accommodation and how you can get above average returns from this asset class. So I'm going to take you through high level a report that CBRE Commercial has just released. It is on commercial properties, but even if you are looking at investing at a single house level, this information you are going to want to listen to. So student accommodation means students are living in an accommodation facility and they go to an Australian university. So we have a look at some international student enrollments, and you can see that the numbers in 2023 have picked up to the level where they were in 2018, 2019 before they dropped off over COVID. Now we are a lot higher than what we have been over the previous decade, back to 2013 and even prior to that. Even when we had the last property boom, we did not have the number of student enrollments in Australia that we have now. So you can see that the arrivals with temporary student visas, the rolling 12 months has shot up substantially, and that is basically students coming from overseas to come and study at Australian universities. So I'm probably telling you things that you already know, that we have overseas migration. A lot of that migration are students and are on temporary visas. They come over here to study because we have the best universities in the world, and it obviously pumps our economy as well. And also it increases our overseas migration into Australia. So how can you benefit from this, or how can you get above average returns from property using students? So let's jump in and have a look at a few different key stats. Before I do so, I just want to remind you that this research paper that I'm looking at does refer to commercial assets, but you can use this information to then relate it to yourself, even if you're looking at buying a single house to generate above average yields. So one thing to remember with the rents that I'm about to show you is, and this one for an example has things like a gym on the bottom right hand corner. They've got other facilities, say other communal facilities like outdoor barbecues. They've got pool tables. So you've got to keep that in mind as well. We're not just comparing a single residential house with no facilities. So let's jump into a few key stats. So CBRE has looked at a number of different buildings, and they've given us a range as to what students are paying with accommodation per room. So on the bottom, you can see the capital cities. And then on the graph, you can see the amount, the dollars per week that each student pays. And this would be all inclusive of bills, remember. So the bills would be up to the landlord, the owner of the property. So you can see in Adelaide, they've got rents from sort of low $200 per week up to $400 and $500 per week. Brisbane, a bit higher, they start at low 300s up to $400 and $500 per week. Canberra is similar to Brisbane. Melbourne is similar to Brisbane, but it does go a bit higher than that, and they would be obviously premium inner city properties. Sydney is substantially more than everywhere else, and you're probably not surprised by that just with how the price of Sydney is, and also a lot of the university accommodation they would be comparing would likely be in the CBD itself. So you don't have to own a property in the CBD to generate these bigger returns. I'm talking about being located near a university where you can charge premium rents, but you don't necessarily have to have a property located in the CBD. I think the CBD is not a good place to have a unit personally, and it's an area where I would not like to own a unit just because there's so much competition. So I'd rather own a house on the outskirts near a university, so within walking distance, or right next to public transport that'll take me straight to that university. So they're the capital cities, they're the sort of rent premiums that students are paying, and admittedly a lot of these would be overseas students paying these massive rent premiums, especially in Sydney and Melbourne. But you can see how much they are. If you've got a house that's got 5 bedrooms, say, and you've got 5 people paying, even $300 per week, that's $1,500 per week. And if you're in a very modest suburb, that can be a huge return. So jump into having a look at some of these average rates. You can see Melbourne and Sydney median weekly rent, $406 in 2018, and then it's jumped obviously a bit to $530. So it's jumped substantially in that time, as have residential property rates as well. But just some of the facilities that I mentioned before, this particular student accommodation in Mascot has a gym, it's got these communal areas, it's got these pool tables. So they're going to demand a premium just having those facilities that people use. But one thing to remember as well, university students don't always meet where they live. They will have events outside of that, or they may invite students or other students into these areas. So just because these facilities or this accommodation has these facilities doesn't mean that students are willing to pay that huge premium to be there. And for a lot of students, they may not even be able to afford it. In a lot of instances, it'll be the parents that will be paying for the rent, or in probably 99% of instances. So if the parents can't afford to pay it, or if there's a cheaper alternative, they're going to be looking at the cheaper alternatives. So these are the weekly rental options I mentioned before and the rates. Now, the key stat here, which I want to pinpoint and why I think this area is going to do exceptionally well, is the amount of deficit, so the supply coming to the market, but also obviously the completed project. So you can see by the rent, people are paying a premium to be in student accommodation. Melbourne has the most supply according to this, and then closely followed by Sydney, but their pipeline is pretty massive, whereas Melbourne's pipeline is quite small. Brisbane, again, virtually zero pipeline. Canberra, Adelaide, Perth, there's not much in the pipeline and there's not much existing. So what that translates to is huge deficit, so a massive amount of demand for these properties and basically no supply. So you can see at the top, you got the dwelling deficit per city. So you got Sydney, you got nearly 100,000 dwelling deficits, which is huge over the next 5 years. Melbourne's got even more, 137 dwelling deficits, 137,000 rather. Brisbane's got 50,000, Gold Coast has got 5,000, Perth has got 70,000. So for a city the size of Perth to have 70,000 dwellings deficit over the next 5 years for student accommodation is massive. So the student accommodation in Perth is going to be in well under supply. So that can only mean one thing. There's going to be massive pressure on rents in that space. And with the rents climbing so substantially in Perth outside of student accommodation, this is even going to get worse than that. So I think there's some real opportunity in this space. One key thing about Perth, especially over Sydney and Melbourne, is that the price of properties are so much cheaper. So you could convert a property into a student accommodation, add some en-suites to there, add a desk, furnish the property, and you can rent it out for a premium. Now, I'm not saying that this is going to work in every location, but I'm just talking about overall. Pick a location that's got good amenity to where the university is, either public transport, walking distance, and chances are you will have demand for a student accommodation property. So that's just a quick snapshot on the stats, and I think student accommodation is a great opportunity, even if you're getting in at the ground level on a single house as a retail investor, or I think or if you're buying a $50 million asset in the instances referred to in this report. I think it's a great opportunity that's really growing over the next 5 years, and this graph especially highlights what the dwelling deficit is going to be, which every time there's a deficit of dwellings and there's capacity to pay, in other words, the students coming in are able to pay that rent returns always climb. So they're going to be looking for more affordable alternatives to what they're currently paying. And in the instance of like Sydney, for the likes where they're paying up to $500-600 per week per room, like that's huge. People are not going to be able to afford those levels, or students, parents are going to be looking for alternates to paying those huge amounts of rent. So thanks for watching. If you have any questions, please let me know and leave your comments in the below, and subscribe for more. If you like this video, I can do more on other asset classes in property. Just please let me know what other asset class and area you'd like me to compare.